All right, so we had a very interesting week in the markets. The last couple of weeks have been kind of leaning on the pessimistic side, and then this week the markets just shoot up. The S&P is within striking distance of an all-time high, and as far as the markets go going forward, I think that the same thing that I've been saying is going to go in that the last time we had a little bit of a run up was that like 2 or 3 weeks ago. The markets bounced and went down right around that high on the S&P, and then they went right back down again. We are very close to that. The big question is, do we go above that and continue to trend up, or do we bounce off that again? That's going to be the big determinant in how things go going forward. So keep an eye on that in the coming weeks. But first things first, if you get value out of this video, please like and subscribe. I really appreciate that. Getting right into it here, there's a couple other things I wanted to get into here. So this is from Jim Bianco, and then this is the credit spread chart. And basically credit spreads are typically your difference between the high yield corporate rate and the benchmark rate, which is usually like the government, the Fed funds. And this is basically very close to a decade low. And obviously the higher the number, the more, for lack of a better word, volatility exists in the system. And this is very, very low. Like this is actually well below the average. So when you look at this chart, this points towards, hey, yeah, there's a lot of potential negative data out there, being the yield curve, disinversion. The jobs numbers have been weaker than expected recently. Inflation's still not even technically under control based on the Fed's numbers. So there's a lot of reasons to be pessimistic, but on the flip side, there's also a lot of reasons to be optimistic. So this is a very hard market to predict. I still think that we're a little overdue for a larger pullback, but again, it might not be a 20%, 30% pullback. It could be 10%, it could be 15%, it could be 7 or 8 again. Nobody knows. And the other thing too is that we could go up another 5 or 10% and then pull back 10 or 15%, and we're right back to where we started. So nobody knows really how that's going to go. I still think that we're going to see another drawdown before the year is up, but obviously nobody knows, and nobody knows when it's going to happen. So I just wanted to point this chart out because this chart tends to typically would imply that, hey, we're not in a lot of trouble. But the yield curve disinversion implies that we are in trouble. So that's very hard to kind of decipher this stuff. My personal opinion is I don't think we're in major trouble. I mean, at least as far as the U.S. market goes. Canada, we're definitely in a little bit worse shape. Europe as well, and I mean pretty much the rest of the world. I mean China, they're in a lot of trouble. There's nowhere, at least of the major markets out there, that I'm super confident in. So this is one of the reasons that I am leaning on the confident side of the U.S. markets, because although they have a lot of problems, they're still the cleanest dirty shirt. And not only that, the U.S. markets have by far the most liquidity, and that's something that a lot of people don't take into account as well when they're investing. Is liquidity is very important. So just wanted to point that out. Michael Saylor, MicroStrategy has acquired 18,300 more Bitcoin at just over 60,000 a coin, which has achieved a yield of 4.4%, 17% year to date. They currently hold 244,800 Bitcoin, which is over 1% of the total supply of Bitcoin. I think that's probably 1.2, 1.3%. And their average is 38,000 a coin. So they're still up. Well, they're still up roughly, 40% roughly on their holdings. I think that's even a little bit more. Sorry, that would be like 60%. So they're still up quite nicely. And a lot of people are getting pessimistic when it comes to Bitcoin, and I don't really know why. Now, the reason is obvious. The price hasn't really gone anywhere. That's obvious. But when you look at Bitcoin, like what has happened over the last 6 months to a year that would point towards a reason as to why people should be bearish? Like, really nothing has happened. I mean, the main reason the price has been held down is because you have like the Mt. Gox stuff, you have some of these governments selling off large amounts of Bitcoin, but that's a temporary thing. Like, governments and Mt. Gox, like they're not going to be able to sell off tens of thousands of Bitcoin on a regular basis. Like, it's just not going to happen. It's mathematically not possible. So I think, and not only that, you when you look at the whales, like at the end of the day, the whales are the ones that are going to determine the price, and the whales are always net buyers, at least over the long run. Over short periods of time, they might sell here and there, but over the long run, they're always net buyers. So when it comes to Bitcoin, yes, the price has gone nowhere for, what has it been, 3-4 months now, but that's 3 or 4 months. And again, this is Bitcoin we're talking about. This isn't stocks. This isn't bonds. This is Bitcoin. It can easily, this happens all the time. It will go nowhere, maybe even down during a bull market for 3, 4, 5, 6 months. And then it goes up 50, 100% in a matter of, a similar amount of time. So over the next 6 months, it would not surprise me even in the slightest. Like if we're at 100,000, 110, 120,000 a coin by New Year's. Or if we're still chopping around 60, that also would not surprise me either. But you need to look, in my opinion, you need to look at what's really going on out there. And there's really nothing going on that is fundamentally going to change Bitcoin over the long run, which is why I still am massively bullish. And people say, okay, well, what would cause you to be bearish? Well, realistically, there's not a lot, but I mean, the most likely thing is you start to see a lot of selling from whales. That would be one of the main things. And if Western governments decided to go really crack down really hard, not just their usual, we're going to talk tough, but we're not really going to do anything significant. Like, I mean, legitimately be like, hey, we're going to call for 90% tax rates on crypto, or jail time, like that stuff. Like that is what I would be looking out for. Like, that would be legitimately concerning. Obviously, there's people that believe that. The real question is, are they actually going to get it through? And that's the other thing too, is that politicians like to talk a big game, but do they actually get anything done? And the same goes on the other side too. We have a lot of politicians out there, I don't really need to name them, they're talking a big game when it comes to Bitcoin and to crypto, but are they actually going to do anything? That's the real question. So look out for that when it comes to Bitcoin. But fundamentally, in my opinion, nothing has changed, and that's why I'm not concerned. So next things to get into here, as far as the specific indices and stuff go this week, it was a week when the growth side clearly outperformed. The SPY was up about, the S&P was up about 4%, Nasdaq up about 5%. Mid caps actually had the worst week, followed by small caps were up about 4%. The equal weight index grossly underperformed the S&P. But that's coming from recent periods where it's clearly outperformed. So my thoughts there still are the same. I still think that the value side is going to outperform. I still think the equal weight S&P will outperform over the near term. If rates go down, and I mean they're going to go down, it's just a matter of how much and when. I would look out for the small caps and some of the growthier names probably to have a resurgence. But over the short term, I still think that the place to be is the value side. But that if rates go down 100 basis points over the next 4, 5, 6 months, then yeah, growth is probably going to be back in style. So that's something to keep an eye on. And when it comes to where exactly which indices are going to outperform, I think it depends a lot on rates, because the lower rates go, the more your growthier and small cap names are going to outperform. So that's something to look out for. Another thing to point out here, like just to make my point here, the Meg 7 ETF was up a lot this week. It was up about 7%, I believe. If we check it out here. And yes, there is a Meg 7 ETF for those people that are interested. I'm not saying I necessarily am advocating for it, but nonetheless, that's what I'm saying there. So the Meg 7 ETF did outperform, but it wasn't by that much, actually, now that I look at it. So that's another thing to keep an eye on. Like I said, not necessarily supportive of this ETF necessarily, but this is one that I have on the watch list. I have price alerts on. it's mainly just to monitor the market, because this ETF is going to drive the market. Like when it goes higher, the markets are going to go higher, and when it goes lower, the market's going to go lower. So that's the main reason I watch it. Now, again, if I could get it at like a 52-week low, even though I don't even know if it's been around for 52 weeks. Let's see here. Yeah, it came out actually almost exactly 52 weeks. September 18th of last year was its inception date. So if you look at this ETF again, it topped out at about 45 and a half and change, and again now we're back up to 45, just over 45. So like I mentioned earlier, this is the key support levels you need to be watching, because if it breaks out above this number, if the S&P breaks out above 56, 60 and change, or wherever it was at, that's going to signal the market's most likely going to go higher. If we form, I guess it'll be a triple top at this point, and it goes up to the mid 5600s and goes lower, then that most likely points towards, hey, we're going lower, or at the very least, we're going to chop sideways. Chopping sideways is my most likely prediction. Yeah, I think we'll stay within that, about a 10% range over the next 3, 4, 5 months. And then once we get the election out of the way, once we get more data on the economy, once we get more data on, hey, this is what the Fed, not what they're saying they're going to do, what they're actually doing, then we're going to know. I lean on the more dovish side, the more bullish side when it comes to the markets. And the reason for that isn't necessarily all the data points to that. The reason is that on average, markets go up. Like I think it's 75% of years the market is up. So on average, the markets are going to go up. And on average, at the end of the day, as much as the Fed and some of the people in there want to be hawkish, at the end of the day, they're going to lean on the dovish side. Not always, but on average, they're going to lean dovish. So that's just playing the odds right there. Obviously, I have no crystal ball. I don't know, but that's just playing the odds. So the last thing to bring up here, as far as the mock portfolio goes, basically, I've sold off more of the SPHY and the USHY positions. Those are both down to between 3 and 4% of my overall portfolio there. And I plan to go maybe a little bit lower on those, probably get them around 2 to 3%, and then just hold them, because when you are selling as many options as I am in this portfolio, you need a little bit of extra liquidity in case things go south really quickly. You need some liquidity, so that's why I plan on keeping a little bit of that. But nothing really has changed. This is what I've said time and time again, that whether the markets are up, down, sideways, like nothing should change in your outlook, because it doesn't matter. But if you're a short-term trader, okay, that's different. But I am not a short-term trader. If you're looking for a short-term trader, I'm not your guy. I'm a medium to long-term holder. I'm talking years, if not decades. And if you want short-term stuff, I'm not your guy, like I said. If you want that's what I do. So as a long-term holder, I don't care about short-term fluctuations. So there's really two things. You're looking for good companies, and you're looking for good companies at a good price. That's all you're doing. I don't care whether the market's up 30% or down 30%, or if we had the worst trading day in the last decade or the best trading day in the last decade. Whether the market's at an all-time high or a 52-week low or a decade low, nothing should change, right? If you like it, I'll put it this way. If you like a company, whether it's at a 52-week high, a 52-week low, it should change absolutely nothing on whether you should invest in it. Like, it should change absolutely nothing, because there's two things you're looking for. You're looking for whether it's a good company, right? So if it's growing well in the past, it has good management, it's profitable, if it pays a dividend, is the dividend sustainable? Is it growing it? Is it not? It's not issuing shares to grow. All those kind of things. It has a good balance sheet, obviously. And then that's the main thing. And the other big factor is it a good price? If it's trading way above its 52-week high, like take NVIDIA, right? NVIDIA, I think, is a great company. Absolutely awesome company. But it's way too expensive, right? It's way too expensive. And I'll show you just to make a point here. PE of 55, which is, again, it's below its 5-year average. So a lot of people probably see that and say, hey, it's cheap, it's below its 5-year average. Well, no, because 55 is more than double the market average. So if you're going to buy Nvidia, you are buying it based on the assumption that it is going to more than double the market average, which for a company that's at a market cap of almost $3 trillion, what are the odds that that happens? It's pretty unlikely. It's possible, but it's unlikely. Price of free cash flow is 62. That's pushing 3 times. That probably is 3 times the market average. Even amongst tech companies, that's still well over double. A price of sales of 30. The general rule of thumb is you don't buy companies with a price of sales over 10. So it's a great company, but it's way too expensive. So that's simply the point I'm trying to make there. So that is what I wanted to bring up today. Like I mentioned off the start there, if you get value out of this video, please like, comment, subscribe, all that good stuff, and stay tuned for more.